Welcome back, folks. And, each and every month when we get this grain report out, man, we got the man. We got our man, Mr. Sal Gilbertie. Sal, folks, is the president of Teucrium Funds. Now, you can come over to our website. You're going to see the banner on the right-hand side. As you hit that banner, what you're going to see is this, okay? We talk a lot of commodities around here. In what has happened, and it's a beautiful thing, folks, in the last 10 years, well, you don't have to trade futures in order to trade these commodities, okay? We actually have 5 listed stocks on the NYSE. You want to trade corn? Well, C-O-R-N. You want to trade wheat? W-E-A-T. You want to trade sugar? And sugar's on the move, and so isn't corn. C-A-N-E. And soybeans, S-O-Y-B. You want to trade them all? You just trade tags, folks. Sal Gilbertie, welcome back to TFNN.
Thanks, Tom. Great to be here.
It's great to have you, man. And I got to tell you, you're an outstanding guest, man. And in the last 2 days, I told folks you're going to come on. And, in the digital age now, which is pretty cool, we get immediate feedback. And, what's so cool, man, and I appreciate all you Tigers and Tigresses being out there, because when it's immediate like that, it's real. You know what I mean? So it's like you've been giving us a great education. It's just awesome, man. So we're going to start with a thanks.
Glad to help. Pleasure.
Totally. Now, you sent us over some charts, and my son and I, we were going through these charts yesterday, man. This is pretty amazing. Now, if you're watching Tiger TV, so can you explain what we're looking at here, Sal?
I actually can't see the chart, so tell me what we're looking at.
Okay. So what we have up here is that we have the charts from the Signal Trade Group, and what we're looking at is the 5, 10, 15, 20, and how these seasonal lows come in.
Sure, and okay, so those are from our friends at Signal Trading.
Yeah. And
they keep track of the seasonal pattern of the front month of corn, so the most active corn future.
Okay.
Now, what that does is it pretty much, in a really good snapshot, shows that at harvest time,
yes,
which I think we've spoken about this before, we're
yes,
right in the midst of the big northern hemisphere harvest. And you've got the United States and China as the world's 2 largest producers of corn.
Okay.
We're harvesting right now all that corn. So in any market, when you get a huge influx of supply,
sure,
that of course can put some downward pressure on prices. What has happened in the past, and it does not always happen, let's be clear.
No, I understand, okay.
Yeah. What's happened in the past is that in normal years, meaning there wasn't a drought, there's no shortage,
sure,
we've got good farming conditions for farmers, just like we have this year. That's what's happening this year. You get this influx of supply, and it tends to create a buying opportunity or a cyclical price low, which can be viewed as a buying opportunity, depends, sure, what you're looking at. And in corn, it's really outstanding. Basically, the first couple of days of October, as you can see from those charts over there, they for corn are really critical. Now, one of the reasons is because we have the September 30th stocks report, which came out at noon East Coast time today. And what that does is it sets the baseline for all the projections for next year, because it gives you the stocks as of September 1st, which is what all the agricultural economists use as their baseline projections to then add new production to say, here's how much corn or wheat or soybeans are going to be in the world for the next crop year. And so
for the whole year. Oh, isn't that cool? Okay.
Yeah. So today's report set the basis. Now, there was nothing special about today's report. It came in just about as anticipated, almost exactly on corn as what the market predictions were. Pretty close on soybeans, a little bit off, but there are plenty of soybeans, and I think offsetting the fact that stocks are a little lower than expected in soybeans is that we're in the midst of what farmers perceive to be a really bumper crop year for soybeans. So kind of neutral there. Interesting on wheat, you may have seen it's up almost 2% today.
Yes.
That is because while the number came in a little lower, it came in 59 million bushels lower than anticipated.
Okay.
It sounds like a lot. It's really not. I mean, we're talking about over 2 billion bushels of stocks laying around. So,
wow.
It's really not. That said, what was in that report is they show what's called disappearance, and that's the implied usage. Once they figure out what's in storage, what's in transit, what has been grown, new crops coming in, and they calculate that big number, what's left and from the last time they calculated, that's disappearance. And the disappearance, meaning demand, was up by about 1% year on year for the same time period last year in this report for wheat. Now, interesting, it was up for corn. It was also up for soybeans. What we can't stress enough here is that no matter what the stock market does, no matter what the uncertainty is in the financial world or around the globe, whether it's economic or geopolitical or something else, people are going to use crops. They continue to eat. They continue to feed their animals. And that's where there's some opportunity in this cyclical pattern that we see in corn and other markets. But the charts are for corn. It's really an intense cyclical that tends to kick in not in every year, but primarily in years when things are normal, and things are kind of normal this year. So
I know, that is so cool. And folks, if you happen to be watching Tiger TV, I'll explain. I have the right now I have the wheat chart up, and if you are in your car, well, if you're watching Tiger TV, you can see it. We did, folks, 100,000 contracts today, coming into 67,000. So this is set up an ABC structure on the way up. These are just price projections I do, Sal, but that looks to me like we get 550. Now, when you take a look at that, what you can do, I know a lot of folks, you don't trade futures, and you don't have to anymore, folks. You can go over to WEAT, and what you're going to see there, that was up 17 cents today, and the bottom line is it's the same type of setup. Your A is 24. Well, it's even more interesting. It's 90 cents. So that's setting up 1070. Interesting. Yeah.
I'll take your word for the numbers. What I do know is that there is opportunity in agricultural commodities, and in particular, I think if you really look at some prices, and you can probably look at the futures prices there of corn, wheat, and soybeans. Corn on the spot continuation charts has had a really difficult time getting below 360 a bushel.
Yes.
Wheat getting below 480 a bushel.
Right.
Soybeans getting below about 860 a bushel. Why is that? That's because we're nearing the cost of production. So, these commodities, as with any other commodity, once you get down near the cost of production, the selling tends to lessen, and there may be an opportunity here, especially with crops, because it's not a matter of if, it's a matter of when there's a drought. Droughts tend to come every 5 to 7 years in a major way in the big three crops, soybeans, wheat, and corn, and there's actually a yield decline for whatever reason that comes on average about every 3 years in corn. And so these are really significant things, given that the usage, as confirmed by today's report and the disappearance numbers, is really intense. The usage numbers are growing. They may be growing slowly, but they're growing. A lot of news about China, and metals and industrial metals, and will they use this or that because their economy isn't growing as quickly. They haven't backed off on their soybean imports. They're the world's largest soybean imports.
When you're going, moving up the chain and you start getting used to eating better foods, you're going to eat better foods. Can you just wait, hold with us for a second? We get a quick commercial break and come right back.
I'm here, Tom.
Awesome, man. You stay right there, folks. We got our man, Mr. Sal Gilbertie. Sal is the president, folks, of Teucrium Funds. You can come over to our website at TFNN. You're going to see the banner on the right-hand side. Pull it up. You can check these funds out. They all trade on the NYSE. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finish up 235. NASDAQ was up 102. S&Ps were up by 28. We have our guest, Mr. Sal Gilbertie. Sal, folks, is the president of Teucrium Funds. They trade on the NYSE. Now, you can trade corn, wheat, sugar, soybeans, all of them, right on the NYSE. The symbols for corn, C-O-R-N, wheat, W-E-A-T, soybeans, S-O-Y-B, sugar, C-A-N-E, if you want to put them all together, T-A-G-S. Sal, let me ask you, when we take a look at the corn, soybean oil, the wheat, it seems that they trade all, not necessarily together, but is it because that they, the farmers bring all that crop in at the same time? Is that how this works?
In general, yes. For corn and soybeans, they directly compete for acres. So if you're a farmer, you're going to do some simple math. You're going to figure out what do you want to plant, corn or soybeans on that same acre. Wheat is a little differently. Wheat, wheat kind of has its own acres. In general, wheat also has 2 harvest seasons. Remember,
what's the difference between I see this, the Kansas City wheat and the regular wheat? How does that work?
Kansas City wheat is a hard winter wheat. And the Chicago wheat is soft red, and that's the bigger contract. The harder wheat is used for really fine flours and pastas. The softer wheat's used for everything. It can all be used for everything, but the hard red winter is grown over the winter. You actually sow it now. You sow those seeds now. They come up a couple of inches. You hope they get enough moisture and enough growth to really put some roots down, and then get a good snow cover on them to protect them from the cold. And then they grow, starting in the spring, they have that head start. That's your winter wheat. That's harvested in around June-ish.
Yes.
And then you have your regular wheat. Some people call it spring wheat. That's actually planted in the spring as soon as the ground thaws and farmers can get in there, and that's harvested in the autumn. And so you actually have 2 wheat harvests. So wheat's a touch more cyclical in nature than, say, corn and soybeans, where I know the seasonality chart you put up earlier for corn.
Yeah.
That's really clear. That
is.
thing often bottoms around the beginning of October. Interestingly enough, when we look at, that's a spot continuation futures. But if you look at the futures for next year. So, if you're an investor, you're going to buy something, say our corn fund, CORN, on the New York Stock Exchange. That holds a variety of contracts in it. One of them is always the FAR month, December. So the anchor month is December following 3rd month futures, which often is the next crop year. So if you look at, say, this year, next December's futures price, and do a study, which we've done. If you look at the last 26 years, the low for that December contract, 46% of the time has been put in September through December.
Wow.
So there's real seasonality, there's real cyclicality, and there can be real opportunity for investors who are looking at this.
So what's so cool, what I just realized, I'm going to switch gears on you for a second, though. This is what's so cool, so I'm going to put this up right now. But like when you're creating the ETF structure, that's really important also as to what you're putting inside it, right?
Absolutely. There's only one corn ETF. There's only one wheat ETF. There's only one soybean ETF. We designed those. I designed them to never hold spot month. They hold multiple months out the curve. And the reason that is if you trade out the curve, not only does it take into effect volume and seasonality and liquidity issues, but there's these things called contango and backwardation, which are complicated concepts. They have to do with primarily the cost of storage and demand. And they can affect the performance of an ETF. So whether you're trading a Teucrium ETF or any other futures-based ETF, one of the things you need to be cognizant of is this, what they call roll yield, or the effects of contango or backwardation. So if you have an ETF that just trades spot month, that's a very good ETF to get immediate near-term results. That's really for short-term trading. If you have an ETF that holds across the futures spectrum like ours do, that's a much better, you can use it to trade with. Obviously, they're very liquid, but that's much better suited to a buy and hold investor.
That's amazing, man. That's so cool to know. Right. I got it. Yeah, because that's
important.
Yeah, it is. No, I can see that. I can see. I brought up the December 2016 contract. Right. Exactly.
Sure. Now,
what's amazing is that's an active contract too. There's 15,000 contracts traded in that today.
Well, understand, December is what the farmers use to hedge. When we designed these products, we did it with liquidity in mind, with transparency in mind. Remember, these are unleveraged long only, so they go up when the commodity goes up, down when the commodity goes down. They have virtually unlimited liquidity. The corn futures market trade billions and billions of notional volume a day in dollar volumes. Nobody's going to put that much money into the corn ETF. If they wanted to, they could, because it's in the future. So any ETF doesn't just have to be ours. Any ETF is as liquid as its underlying components. These just happen to be some of the most underlying commodities, liquid commodities in the world: corn, soybeans, and wheat.
Wow.
They're enormous.
Now, I want to switch gears on you for a second. Sugar. You know, sugar's on the move here, man. Sugar was up 3.3% today.
Yeah, sugar's a nice market. I think a couple things have happened. One, we're in year 5 we've had 5 consecutive years, let me put it that way, of there being more sugar produced in the world than has been consumed.
Okay.
This is the first year that sugar economists are saying privately and publicly in their projections that we may actually finally switch that. There may be more sugar used this year by a very small amount than is produced. So for the first time in a very long time, the supply-demand imbalance, which was imbalanced in favor of supply, is changing. And so there's more demand than supply coming, according to most economists.
Yes.
Second, the Brazilian real has depreciated so much, and as you know,
right,
commodities are priced in dollars in general around the world, and that has really affected the price of sugar. If you factor out, I've seen private studies where they factor out the effects of the real.
Okay.
Sugar's has undergone quite a rally ex-currency considerations. And so the fundamentals in sugar are changing. Sugar's been a depressed market for a long time. Jim Rogers has been pounding the table to buy sugar for years, and he's been wrong because of the fundamental situation, but eventually he's going to be right, and sugar's going to turn around.
You know, it's amazing, folks, and Sal, I put up a continuous contract. So 2011, you're at 36 cents, and we're 12, right? You gotta love that, man. That's awesome, man. I mean, that's that typical thing. Hey, if you want to buy something, less expensive, well, guess what?
There's no question. The other thing to note is that in 20-year studies, sugar is the least correlated of the major commodities traded in the ETF format to the S&P 500. It's far less correlated, as are all the grains, corn, soybeans, and wheat, than gold, and far less correlated than energy. So people looking to commodities for diversification,
yes,
they should really look pretty hard at grains and sugar, I would think.
No doubt. Well, listen, it's always a pleasure having you on. Can't wait till next time, and you have a great one and a safe one, Sal.
It's always fun, Tom.
Thanks, man. Have a great one. You stay right there, folks. We're going to be coming right back, and so you can come over to our website at TFNN. You want to trade any of those vehicles, folks, it's CORN on the NYSE for corn, WEAT for wheat, CANE for cane. Sugar's going up, folks, big time. Soybeans, SOYB. If you'd like to trade them all, put them in all one package in your portfolio, TAGS. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.